Boeing has really taken off, pardon the pun. It's hitting 210 right now. It was, it's bounced around a lot, but it was down just a few weeks ago at about 218, 219, something like that. And we're hitting 210. I mean, that's obviously a very big move. The question is, can it go further? And I think the answer is yes. And first, full disclosure, I did buy this in our model portfolios, and I did buy it personally in the 138, 140 range, somewhere around there. I didn't do a video on it, and to be perfectly frank, I just thought it was too risky at the time. Now, listen, it's up quite a bit. Why come in now and say yes? Well, I do think there's more upside, of course, and I do think the risk is actually lower. Yes, the price is higher, so your upside has, been somewhat mitigated, but it still can go higher. And I just think the risk is lower. So they had done a debt financing for $25 billion, and it was oversubscribed. In fact, I think it was originally lower, oversubscribed. So that gave me some comfort that there was investor demand. It also shored up the balance sheet, which was the most important thing. This is also on the other side of COVID type of stock, and we needed to make sure we were going to get there, and at least in some, we knew we were going to get there, but what time frame was the question. I mean, we're pushing forward, rightly or wrongly. That's what's happening. So I do think, even though the price is higher, it has been de-risked. So that's important. The risk reward is constantly changing, and the reward, although yes, is not as high right now, the risk component has also come off the table as well. So how do you play it now? It's just torn up for the last 3-4 days. There's a very good chance it just has a little bit of a pullback, and that's when you can step in. A strategy that I do a lot is buy a little bit up front, especially when it's running higher. Just buy 1%, and you're trying to get up to 3 or 4% of your portfolio. Then you buy that on the pullback part. If it never gets the pullback, at least you were in. So that's a fairly common strategy I use for trading. And I'm not really a trader. I'm more of a buy a good company and hold it, but still want to do my best on the trade. Okay, let's look at it in our model, and I've got the actual default, and the default actually says it should be completely owned by the debt holders. There's zero intrinsic value. Okay. Now I don't really believe that, and I'll show you how we actually do these things in real time. So check out the return on invested capital. It was humming along 8-9 for quite a while, and then just really came into its own the last couple of years, 14, then 16, and then fell out of bed, and for more than one reason. The 737 had some issues, a couple of crashes that were Boeing's fault, and they needed to fix those planes, and they took massive write-offs. Returns were way down. And then of course COVID and the other thing, so that those two things together are brutal, absolutely brutal, and they showed up in the financials rather quickly too. So and then going forward, nobody thought it was going to be a recovery right away, and it's not, and we're not going to model that. We are gonna say they're going to grow their capital at around, let's just say 10%, okay. And I do think they get back to the 15% return. So I'm going to ignore the first year, though, because they're not going to get back to 15% right away. But I do think they could maybe in 2 years. Maybe it takes a bit longer. But you'll see, the really important piece of the valuation is actually the long term. And that's why they tell you to buy stocks for the long term. This is a really good kind of lesson in, see how we forecasted just a terrible year. Yes, if you're going to do something like a PE multiple on next year's earnings, you wouldn't understand the value of the company. If you, on the other hand, do a projection for the long term and say, yeah, no, they can get back to 15%, and then after that year 5, that's year 5, we're saying it fades back to a, earning the cost of capital. Well, even that I think is too punitive. I think they can do a little better. So I'm going to tweak the rate at which it fades back, and I'm going to say 8%. And then I'm going to say in the long run, these guys can earn about a 10, let's say 10 or 12, let's go with 11, just say 11. Oh, and all of a sudden it's worth $356. Lo and behold, that's what it was trading at roughly before the COVID. Got as high as $427, I believe, was the absolute peak. So we are still way down from its peak. We're half. Okay, yes, we're not at the bottom, but we've de-risked. The valuation is there if they just become the company they were before. Are there some challenges? Absolutely. Is it guaranteed? Absolutely not. I will tell you this as well. Big investors love this company. You pretty much have to be in it if you're a big fund. You certainly don't if you're not a big fund, but there's really only one other competitor of stock you can buy in airlines, and that's Airbus. And that's international, and some U.S. funds wouldn't even buy. And then there is Embraer, but Embraer is just really small. So a big fund, you got to be in I was going to say airlines, it's like airplane manufacturing. There we go. You're going to buy Boeing. And it's a good defense company. It's a huge company too. So I think there's a lot of reasons to buy it even after this move. Be careful with your trading a little bit, but other than that, yeah, we think it's really good opportunity. Thanks for watching our investment video. If you want to improve your portfolio returns, simply subscribe. Or if you're an investment advisor or a retail investor and you want help with your portfolio more directly, we can help you with a managed account and manage each and every trade for you.